Hi everyone, welcome back to our channel. In today's video, we'll be walking through the basics of investing and how you can start investing like a pro, even if you're a complete beginner. If you've ever wondered how to grow your money and make it work for you, this video is for you. So, let's dive in. B-roll of various investment symbols like the stock market, real estate, and bonds. Investing might sound complex, but at its core, it's about making your money grow over time. Whether you're looking to save for retirement, a big purchase, or just build wealth, investing is a crucial part of your financial journey. Understanding the basics of investing. Before we jump into strategies, let's start with the fundamentals. Here are some common types of investments. Stocks. When you buy a stock, you're buying a small piece of a company. If the company does well, so does your investment. Bonds. These are essentially loans you give to companies or the government. In return, they pay you interest over time. Mutual funds, a pool of money collected from many investors to invest in a diversified portfolio of stocks, bonds, or other securities. ETFs, exchange-traded funds similar to mutual funds but traded like stocks, they offer diversification and flexibility. Real estate, buying property or real estate investment trusts, REITs, can provide long-term growth and income through rentals. Set clear financial goals. Now that you know what you can invest in, it's essential to understand why you're investing. Setting clear financial goals helps shape your investment strategy. Here are some questions to consider. Are you saving for retirement? Do you want to build an emergency fund? Are you investing to buy a home or fund your children's education? Your goals will help determine your time horizon, how long you plan to invest, and your risk tolerance. Speaking of which, assess your risk tolerance. Everyone's risk tolerance is different. Some people are comfortable with higher risks for potentially higher rewards, while others prefer a safer, more stable approach. Conservative investors, you prefer stability, and your main focus is preserving your capital. You may invest in bonds or dividend-paying stocks. Moderate investors, you're willing to take on some risk but want a balanced approach. A mix of stocks and bonds is common. Aggressive investors, you're focused on maximizing growth and willing to handle market fluctuations. This may involve investing more in stocks or even venture into cryptocurrencies. Understanding your risk tolerance is key to picking the right investments. Build a diversified portfolio. One of the best ways to invest like a pro is to build a diversified portfolio. This means spreading your investments across different asset classes to reduce risk. Think of it like this: don't put all your eggs in one basket. A well-diversified portfolio might include a mix of stocks for growth, some bonds for stability, possibly some real estate for long-term value, and even some exposure to ETFs or mutual funds for broad market access. Diversification helps ensure that if one part of your portfolio is underperforming, others may be doing well, balancing out your overall returns. Stay consistent with dollar-cost averaging. A great strategy for beginners is dollar-cost averaging, DCA. This involves investing a fixed amount of money regularly, such as every month, regardless of the stock market's ups and downs. For example, if you invest $100 in stocks every month, you buy more shares when the price is low and fewer when it's high. Over time, this averages out the cost of your investments and reduces the risk of trying to time the market, something even professional investors struggle to do. Avoid common mistakes. To invest like a pro, you need to avoid some common mistakes that many beginners make. Chasing hot stocks. Just because a stock is popular doesn't mean it's a good investment. Emotional investing. Avoid panic selling during market drops or buying out of fear of missing out, FOMO. Neglecting diversification. As we discussed, diversification helps manage risk. Not rebalancing your portfolio. Over time, your investments can drift away from your desired asset allocation. Rebalancing ensures you maintain the risk level you're comfortable with. By staying calm and sticking to your strategy, you can avoid these pitfalls. The power of compound interest. One of the most powerful forces in investing is compound interest. This is when your investments start earning money on the returns they've already made. For example, if you invest $1,000 at a 7% annual return, you'll have $1,070 after the first year. In the second year, your 7% return is applied to $1,070, not just the original $1,000. Over time, this can lead to exponential growth, which is why it's so important to start investing early and stay consistent. Long-term investing mindset. Investing like a pro also means thinking long-term. The stock market will have ups and downs, but historically, it tends to trend upwards over time. Avoid the temptation to constantly check your portfolio or react to every bit of news. Instead, adopt a long-term mindset and stick to your strategy. By staying in the market, you give your investments the time they need to grow. Getting started. Now that you know the basics, how do you get started? Opening an investment account is easier than ever. Choose a brokerage. There are many online platforms where you can open an account and start investing. Look for one with low fees and user-friendly tools. Start small. You don't need a lot of money to start investing. Many platforms allow you to begin with just a few dollars. Automate your investments. Set up automatic contributions to your investment account to stay consistent. And there you have it. You're now equipped with the knowledge to start investing like a pro. Remember, the key is consistency, diversification, and a long-term mindset. If you found this video helpful, please don't forget to hit that like button, leave a comment with any questions or thoughts, and subscribe to our channel for more valuable content. Also, click the notification bell so you won't miss any of our future videos. Happy investing, and we'll see you in the next one.